please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. You're with us here on a fresh new edition of Midcap Radar. I'm Prashant Nair. With me is my colleague Sumair Abdi. The markets are pushing up at the day's highest point, 75 on the Nifty, 230 odd points on the Sensex, and we are practically at the day's highest level. Look, and the intraday would tell you the story, almost there. So not looking bad at all. The mid-cap and the small-cap indices, I think this week have had a bit of a reprieve after starting off on a very rough note, have picked up over the last 2 days. I mean, actually only the last 2 days. So maybe week to days, Friday to Friday, it'll be kind of flat. 1% pop on the small cap index. The mid cap index is up about 1.5% as we begin this edition of Midcap Radar. So, good afternoon.
Excuse me. Hi, Prashant. Good afternoon to you as well. So let's get started. First up, our top stories. Market trades near the day's high. Midcap index outperforms. Lawrence Belanco of CLSA sounds a note of optimism. Tells cnbc TV 18 that he expects a year-end target of 12,000 on the Nifty. Okay, so the IT rally is in a way resumed. This is the second day of a broad rally in IT stocks. TCS adds to the cheer after its market capitalization of the 7 crore mark in early trade. United Spirits and United Breweries are higher post good set this quarter. USL management reiterates their double-digit top-line growth guidance. Big earnings due today. Expect Bank of Baroda to post numbers which will show a deterioration in its asset quality. Sun Pharma may continue to reel under pressure of its US business. Also watch out for Tech Mahindra numbers. And speaking on the amendment of the Insolvency and Bankruptcy Code, MSR, the chairman of the Bankruptcy Board says the original law did not define what a resolution plan is. It's left to the imagination of financial creditors as well as resolution professionals. Okay, those are the top stories. We'll touch upon some of them in a bit. Ashwani Gujral is with us on the top of the show as always. Ashwani, you know, we spoke at 11:30. Nifty was up 50, 75, 76 now. You were saying that it's likely, I mean, to go long, stops are too far away. At some point, there would be a dip and those dips need to be bought. Your thoughts? You're reading on the screen now.
See, my sense is that this is some sort of macro news which is driving up markets, possibly the US bond yield, etc. Because otherwise, you know, you would have had a dip. So that way, you know, today's quote-unquote sideways day has not been a big one with big swings, and the market trading at a high point shows you that buying is coming back much sooner than expected. So chances are this should continue. And what's interesting is that now that IT and banks have already had their run, Reliance is looking to participate. You know, above this 921, it's almost there. You know, that should have a fairly decent run. So you have, you know, more legs of the market which are now beginning to participate. I wouldn't be surprised if in the next 1.5 hours you have a large move from Reliance and the market again goes to fresh highs. So possibly first round of short covering done. More is on the way. Individual stocks, I would say, look at Hindalco. That's a buy with a stop of 239, target of 252. Reliance Capital is a buy with a stop of 388, target of 404. Reliance Infra is a buy with a stop of 414, target of 430. You know, since the mid caps have been beaten up so much, this sort of a rally will really give them, you know, wild returns. Like from the lower levels, things could go up 30-40%, a lot lower than where they came out from. But those are the kind of moves, you know, you should now expect given the carnage that we had. Ashwani, thanks very much for your trading ideas this afternoon. Let's focus on the global space actually for a tad bit, because there's a lot happening there. Recently, we've seen the US yield stop that 3% mark. I mean, now there's dollar, which is softening a bit. Gold is back in demand. There's a lot happening between US as well as China and North Korea. And now, of course, is the added threat of what's in Turkey. Carlos Van Hardenberg, the founding partner at Mobius Capital Partners LLP, now joins us on the telephone line to try and make sense of what the outlook is for emerging markets. Mr. Hardenberg, thanks very much for speaking with us. You know, we were recently reading about this interview where Mark Mobius has gone ahead and said that he sees a lot more pain ahead for emerging markets. How worried should emerging market investors actually be? And within the EM space, what stands out now?
Yes, thank you very much. So I think we have to put the situation into a broader context. In emerging markets, we've seen now a prolonged period of very positive market development. Low domestic demand has been repaired. The currencies were stable, more stable than what we had experienced in previous decades. We've seen a lot of support from the benign commodity markets overall, and we've seen a weak US dollar. So that environment where money is being printed globally by various central banks and made available at very cheap rates was kind of a perfect scenario for emerging markets. Now, these situations always come to an end, and there's always some kind of a washout that one has to expect. Now we are seeing the picture is turning. We're seeing that the US dollar is strengthening, yields are increasing, some of the flows of funds are shifting away from emerging markets back to US dollar assets, and we're also seeing the combination of a strengthening US dollar with big moves in the commodity market and the expectation of maybe oil moving back up to a level of 100, especially when Iran is taken out as a producer and the wobbly Venezuelan market will support that. And that overall is not great news for emerging markets. So it will be a big test to emerging markets, and those markets which have done their homework and strengthened their economy, strengthened the exports, invested in innovation, will certainly look better than others.
Carlos, two questions. One, do you have a view on oil markets themselves? I mean, you said broad expectation, I mean, some expectations that it may head back to 100. Do you have a view there? And secondly, can oil and dollar both continue to rise together? I mean, it's unlikely, isn't it?
That's a very good question. Normally, it doesn't really happen. We are used to the fact that the commodity market in general and the US dollar move in opposite ways. So that equation is turning out not to be that robust anymore. My view on the oil market is, look, the demand on the demand side, the oil markets are very predictable. And with India, China, and some of the smaller emerging markets building out their domestic consumer base, increasing demand for oil, we see that, especially on the demand side, there's going to be quite a robust picture. On the supply side, as I alluded to earlier, I think the supply side is the weak link. And some of the big suppliers, now we're talking about, much more discipline from the OPEC, but also there are wobbles in Russia, obviously Iran and Venezuela. And that creates uncertainty, and the market doesn't like uncertainty, especially the oil market. So I think there's going to be lots of support and a lot of reasons why the oil price should move higher from here.
Just to labor that point just a bit further, if oil, I mean, if, as you're saying, supply is controlled, we know the oil is there, but the supply, if it has been controlled, capped, the longer they do it, they keep it capped and prices remain high, there'll be more oil-producing companies which will pop up around the world, in the US especially. And that means that later next year and the year after that, because supply would sort of overwhelm, prices will be lower. Doesn't it follow naturally?
Absolutely. That's the pattern we have seen in the past. That's a similar pattern we are seeing right now. But it's not just the oil price itself, which is of significance and also having a big impact on fracking and alternative production in the US and other places, but it's also the availability of financing, which you shouldn't underestimate. So all these projects need financing. They need long-term robust models in place to finance the expansion. These are very, very capital-heavy projects. So a volatility in interest rates and increasing interest rates, higher costs of financing is not that supportive for these kind of projects. But nevertheless, I agree that the supply will certainly increase going forward. We will see much higher volatility in the oil price as it moves up. The other factor to watch is the U.S. economy as a whole and the U.S. dollar. You were asking earlier about the kind of expectation how long the strengthening of the U.S. dollar is in place. And I think that with a kind of longer-term view, as long as the US dollar or as long as the US is creating such a big deficit, domestic demand is very strong, imports go up and exports, it's only reasonable to expect that the strengthening case of the US dollar will be fairly limited, and currency market participants will once again look at the fundamentals eventually, and therefore that will put a ceiling on the strengthening of the US dollar.
Okay. Mr. Hardenberg, let's talk about India then. If the call is that it's a stock picker's market, specifically, what would you be looking at in India?
Well, the beauty about India is you have a lot of positive domestic developments. You've got a very robust domestic economy, so you have local market plus the export markets are increasingly interesting for India. You've got a very diversified group of companies available to investors from all kinds of sectors, kind of moving away from the classical pharmaceutical model and low labor cost originated businesses, now much more sophisticated businesses, and a lot of local entrepreneurial activity that has led to more companies being able to invest. So I would think that at this point in time, I would try to stay away from the large names which are owned by ETFs, simply because the big index names will move in line with global risk on, risk off. And that volatility is something which I think is right now more risky than ever before. If the ETF starts selling, the big names in India will suffer. And we do know that they will all sell at the same time. So I would really look at the small and mid-cap sector, and there are a lot of opportunities in especially the consumer-related sector, but also healthcare, education. Those are the sectors I find quite interesting right now.
Carlos, what would some of your top bets here in India be?
Well, I shouldn't really talk about individual names.
Okay, but would you rate India as, in Southeast Asia, would you rate India as one of your top bets in terms of the quantum of assets deployed?
Absolutely. I think that India is right now a perfect fishing ground for longer-term oriented investors who look for quality companies. I think that India has to prove to the market that from a macro policy standpoint, reforms will continue to support businesses. It's still the issue of bureaucracy and ease of doing business where India is not ranking as high as it should. But I think the pace of reforms we're seeing is accelerating and the awareness is improving. So that's all good for the market. And I think that also from a general management standpoint, corporate governance is improving. We're seeing more transparency in India and more independent directorship controlling businesses.
Sure.
So that's all very good news.
Okay, fair enough, Carlos. So you're saying a great time to pick stocks, especially in the mid-cap and small-cap area, right? Especially with the big falls that we've seen recently. So that's the view coming in from Mobius Capital Partners. Carlos, thanks very much for your time. Appreciate you joining in with opinion there on global markets, oil markets, India, and what he's doing here, without, of course, naming names. But we've got PFC numbers, Sumaira, which are at the bottom of the screen.
I've not managed to go through it a whole lot, but the stock,
the
you
basic
should look
numbers
it up. The basic numbers are up for you. We have
the profit versus the loss, right? I mean,
it's actually a profit of about 935 odd crores, which compares with the net loss in the corresponding quarter. But our own poll had thrown up an estimate which was a net profit of about 1,400 odd crores. So I think compared to estimates, the number that we have got is a tad lower. But nevertheless, I think there must be something in the internals which is actually exciting the stock. So what we'll do is we'll take a very quick break. We'll have Abhishek actually tell us, what is it in the internals that has actually got the street so excited, because the stock has shot up. And it's not just that it's a net profit of about 335 crores. They have another income component as well, and it's lower than what we had. Okay, there's a provision right back for some of the quarter. But our own poll had thrown up an estimate which was a net profit of about 1,400 odd crores. So I think compared to estimates, the number that we have got is a tad lower. But nevertheless, I think there must be something in the internals which is actually exciting the stock. So what we'll do is we'll take a very quick break. We'll have Abhishek actually tell us, what is it in the internals that has actually got the street so excited, because the stock has shot up. And it's not just that it's a net profit of but 335 crores. They have another income component as well, and it's lower than what we had. Okay, there's a provision right back for some of their restructured assets. So that comes to about 1,700 odd crores.
Okay, look at the market going. I mean, put the Nifty intraday up. I mean, we were speaking with Carlos earlier, and I think we started with, what, a 70-odd point gain? So from that point, I think we almost have a 20-25 point up move coming in, and this is in the last, 15 minutes of trade. So this is turning out to be a big one. 10,600 plus now and going. PFC had reported numbers, and there's a big provision right back. Abhishek is here with more details. Abhishek.
Well, Prashant, if you look at the numbers, in the quarter they have written back provisions on account of restructured book. Now, restructured book, let me remind our viewers, stands at close to 21% of the book, and that is about 56,000 crore that they reported in Q3 FY18. So on that book, they had guided, even in the presentation, that they expect a recovery in one of the projects of about 4,000 crore. But if you look at the provision right back, on that 4,000 crore, typically an NBFC provides about 20-25%. So, but if you look at the right back is at close to 1748 crores in the current quarter, which means there is substantial improvement in the restructured portfolio. Also, in the current quarter, they have increased their provisions on restructured standard assets, which is now at 5%. Despite that, you are seeing an improvement in the profit growth. So the big picture over here is, it looks like the restructured book might have declined based on the operational performance of the accounts.
Vaishya Bank has posted Q4 numbers this morning. There's a divergence which has led to a deterioration in the asset quality this time around. Profit too has come in below the street estimates. PR Sheshadri, the MD and CEO of the bank, now joins in. Mr. Sheshadri, good afternoon. Thanks very much for joining in. To begin with, sir, could you give us what the slippages are in the quarter?
Good afternoon, ma'am. Thank you very much for having me on the show. Actually, we are reasonably satisfied with Q4 numbers. And before I answer the question, if I could just take a minute. I mean, we are trying to transition from a traditional bank into one that can compete in the digital world. So over the last quarter, we introduced our first two digital products. That's something that we intend to follow up with a full suite of products. So currently our working capital renewals and our home loans are fully digitalized. And as a consequence, we're able to do significantly more volumes out of our branches. So over the last quarter, as you said, whilst our profits came in lower than the prior quarter or the prior year same quarter, revenues did grow reasonably strongly. We're up about 10% year on year. Other income, whilst the top line number shows that has contracted, if you were to pare away the fact that most banks are having trouble with their investment book at this point in time, X the investment revenues, the core fee and other revenues for us grew at approximately 20% year on year. So from a revenue standpoint, we're reasonably satisfied. Our expenses ticked up a bit in this quarter. They were up roughly 22%. But that takes into, you need to take into account the fact that we had to provide approximately 26 crores on account of the change in the rules associated with gratuity. Yeah, please go ahead.
Sheshadri, sorry, we're actually a bit crunched on time. So we have the basic broad numbers, and you outlined them pretty well as well. Just the slippage numbers for the quarter.
So slippage numbers for the quarter were roughly about 600 crores, out of which 513 crores pertain to our corporate book. If you recall, the last time around I was on television, I was asked what the watch list was, and we had said that the watch list is approximately 1,200 crores. Of that 1,200 crores, in the third quarter, 550 crores were provided for. This quarter, we've provided for another 325 crores, which leaves another 325 crores to be dealt with. In addition, we were impacted by the February 12th circular of the RBI to the extent of approximately 175 crores. So in total, 513 out of the 596 crores of NPA came in from a corporate book. But I'm happy to inform you that we are at the tail end of our problems with the corporate book, and we expect that as we get into Q2 and onwards, the corporate books should behave significantly better than it has done. So as a consequence, we are feeling reasonably pleased with where we're at today.
Sir, of the divergence that you have reported, how much is recoverable?
So divergence was 651 crores. But I must hasten to add that the accounts that the RBI pointed out as divergent had already been provided as at the end of Q3. The RBI inspection started in Q4. So all of these accounts were already provided. Since the divergence report is as on the 31st of March of the prior year, these accounts did not require to be provided afresh in Q4. However, RBI was of the view that certain accounts needed to be backdated. The NPA date needed to be moved back. And as a consequence, approximately 90 crores worth of incremental provisions had to be taken during this quarter.
Right. No, I mean, so just to press my colleague's point, which is how much of this you think, what's the recovery options looking like from this portfolio?
These are all large corporate exposures. Many of these are, the recovery percentages would depend upon the outcome of the NCLT processes. We are very heartened with what happened with Bhushan Steel, and we are hopeful that the rest of those processes will yield similar results. But it's a little difficult. If it were a statistically studyable kind of, go ahead.
Sure. No, fair enough. So you can't put a number to it. What's your exposure to accounts which are currently under the NCLT process?
Approximately 1,200 crores.
Approximately 1,200 crores. Fair enough. Samira, so I think we can wrap up.
Yeah. All right. So thanks very much for joining in. There's word coming in from Karur Vaishya. Bank slippages this quarter coming in at 600 crores, the bulk of it from the corporate book, but management quite confident now that going ahead, the pain in the corporate book would ease. Of course, a lot hinges also on how the NCLT process move. It's a wrap on Midcap Radar. Thanks for watching. Your stocks next.